This video is brought to you by this prayer potion from Old School RuneScape. No, actually, it's brought to you by me, because if you're clueless about real estate and you're interested in the transition happening, well, there's some programs linked down below that could finally make you real estate wealthy by buying real estate under market value. Coupon code expires August 26th. Hey everyone, me Kevin here. The housing market has started to feel like it's been straight up since about 2011, and the fact of the matter is, it has been. If someone bought a fixer home in 2011 for $305,000 with a little under $20,000 down, they would have seen that little under $20,000 turn into over $250,000 in profit after fix-up, repairs, taxes, expenses, and everything. That's like a 12x more than the 3x we've seen that the stock market would have safely returned, unless, of course, you YOLO'd into margin, which is a great way for people to absolutely get destroyed. This is why I don't advocate for margin. Now, I want to circle back to that scenario towards the end of the video because we've got some really interesting shifts happening, and there's some that you really want to pay attention to that we haven't actually seen flip-flop this way very much. So take a look at this. All right, so first, after the 2008 great financial crisis and housing market crash, some of the first buyers back in the market were institutional home buyers. In fact, Warren Buffett famously said in 2012 that if he could buy as many single-family homes as possible throughout America, that is exactly what he would do.
Equities are still cheap relative to any other asset class.
But they're not.
I would say that single-family homes are cheap now too.
You would?
Yeah, single-family homes. But if I had a way of buying a couple 100,000 single-family homes and had a way of managing, the management is enormous. It was really a problem because they're one by one. They're not like apartment houses. So, but I would load up on them, and I would take mortgages out at very, very low rates. But if anybody is thinking about buying homes, 5 years ago they couldn't buy them fast enough because they thought they were going to go up, and now they don't buy them because they think they're going to go down, and interest rates are far lower. It's a way, in effect, to short the dollar because you can take a 30-year mortgage, and if it turns out your interest rate's too high next week, you refinance lower, and if it turns out it's too low, the other guy's stuck with it for 30 years. So it's a very attractive asset class.
Now, of course, Warren Buffett is a famous value investor. When he sees value, he goes and buys. And today, you have the opposite of that. You don't have a lot of value in real estate. In fact, you have the chairperson of the Federal Reserve telling homebuyers that they're better off pausing and waiting for a reset before buying.
You know, I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels.
These two things together are really important because it goes to tell us that when investors and institutional investors start buying, there must usually be a sign of value, which implies that if they stop buying, then there's a sign of a lack of value. And there's probably also a sign of a lack of value if the chairperson of the Federal Reserve is like, yeah, you may as well wait right now. No, these things are awesome because, hey, they can tell you that when investors are stepping back into the market, you could see a sort of setting of the floor in real estate valuations. Now, some of this is kind of what we're hoping is happening in the stock market right now. Maybe this summer ended up having its stock market low and a floor has been set because we've now potentially hit peak inflation, and maybe we were able to reiterate the disasters that were going on with still good earnings, potentially actually setting that floor in the stock market. Now leading some to wonder, is this a bear market rally we're seeing in the stock market, or is the floor in? Now, Wall Street tries to do the same thing with homes, and watching what Wall Street is doing when it comes to homes is really important because when they set a floor in real estate, you want to be shopping. Now, of course, Main Street tends to get mad about Wall Street buying because, well, after all, it creates more competition for home buyers, but the fact is it also does create more stock for renters and, of course, prevents the free fall of home values because you have somebody coming in buying when prices are low, which is better than having nobody buying because then the 2008 crisis could have been even worse. So tracking institutions is important. But it's not just institutions, it's also small-time flippers and investors. They all helped contribute to that floor in 2011. In fact, the first home that I bought went into escrow in 2011. Now, for 4 months in a row now, here in August of 2020, something interesting has happened. Take a look at this particular chart here. This chart shows that real estate professionals have actually been pulling back from the housing market. And this has occurred now for 4 months in a row. That is, investor purchases of homes in the United States has fallen for 4 months in a row. The last time we've seen something like that was actually during the lockdowns of the COVID pandemic. Usually, though, this number is rising. And if you take it all the way back to 2008, you can see that it consistently has been rising. But unfortunately, now something's changing. The market's not seeing that anymore. And this just gets worse the more we dig. See, we've actually now gotten to the point where institutional investors have decided, wait a minute, mortgage rates are higher, homebuyer affordability is at the lowest level that we have seen since 2008. What's actually starting to happen? Well, take a look at what Bloomberg's telling us. Bloomberg's telling us that some companies like a D-Max Investment Properties in Dallas said a California-based investor canceled 20 contracts after mortgage rates jumped in June, and the company lost about $3,000 in deposits per property to express interest in these properties. That means investment companies are now starting to lose money, canceling deals, and walking away. And you're even seeing iBuyers, which are basically like flippers like Open Door and Redfin, saying that they're trying to aggressively get rid of the housing inventory that they've built up, which potentially leads to sort of an increase of inventory on the market of homes for sale, putting more pressure on home prices going down. And when you start getting a willingness of these companies to actually start taking lower offers rather than keep carrying properties, it's a sign that CEOs and corporate America are like, crap, okay, if we'd rather lose money on deposits and dump properties sooner at a potentially lower price, it's a sign that corporate America is like, yeah, no, this is definitely not the time to be buying real estate. In fact, here's another one. Here is somebody, the chief economist for Moody's Analytics, and they say investors can't make the economics of investing in real estate work, whether they're a flipper, small mom and pop, or institutional investor. Institutional buyers are opportunistic. I'm sure they're waiting, thinking they'll get a much better price for these properties in the not so distant future. Like, this is the stuff that's circulating right now. And really, you can't blame this. Even American Homes for Rent and Rhythm Capital are, quote, taking a more cautious approach, slowing down their purchases. Now, you look at this and you're like, wait a minute. So flippers are relaxing, the institutional investors are relaxing, the total number of purchases by small mom and pop investors, flippers, and the big corporate America ones, everyone's slowing down. What's going on here? Well, again, it's fear that prices are going down or could go down even more. And it makes sense because mortgage rates are up 3% in 8 months, which increases costs for homes. In fact, we're at the lowest levels of homebuyer affordability that we've had since 2006, which is right before the Great Recession. And you've also, on top of that, got new construction home buyers, companies of new construction homes complaining that buyers are canceling deals or taking larger credits to be convinced to take a deal. In other words, taking more builder upgrades or at a higher expense to the building companies, or potentially buying home buyers' loans down, which just means paying more money to try to convince buyers to still buy homes by lowering their interest rates. But you got to start paying even more and more and more, or people just keep canceling more and more deals in the event that prices actually really start falling. Because what happens is, once you start creating more expensive housing and inventory builds up and price drops start ticking up and people start getting more desperate to offload homes more quickly, then you start seeing a little bit of a fall in prices. What happens? That fall turns into an, oh crap, more of a fall is going to happen. Now, something here. There's one word, and I may have already alluded to it, but there's one thing here that makes all of this even worse, and it's a warning that I gave 6 months ago. And the neat thing is, it could be around the corner. Now, I want to talk about what's around the corner, but if you feel like you need help getting knowledge in order to avoid making necessary mistakes that could cost you hundreds of thousands of dollars, and instead learn through the mistakes of others by getting started in real estate and not being clueless in real estate like most people in the stock market are. Most people in the stock market don't know anything about real estate. Seriously, consider a nominal investment. Check out the 0 to Millionaire investing course below. Potentially bundle it with the do-it-yourself property management and rental renovations courses. Not only do you get the best price today, but you'll get me in the private live streams analyzing your deals when you find them and get them in escrow. And you'll also get my entire archive of analyzing everyone else's real estate deals over the last few years. You can become an expert at valuing real estate and making sure you're getting a deal below market value. Everything I've learned is either from my own experience or that of my family's 40 years of experience in professional property management, rental renovation, and of course, real estate investing. You'll learn safe leverage as well. So use that coupon code named Series A, which expires on August 26th, which you can then get the best price on until the price goes up. So folks, what's worse than a price fall? What's worse than prices actually falling? It's literally the following. It's what Bloomberg has thrown up on a chart. Well, not on a chart, but they've been talking about it. Here it is, folks. The first word right here, fear. Fear has crept into the housing market, replacing the can't-lose optimism that attracted mountains of capital in the years after the most recent crash. After the nearly doubling of mortgage rates since the end of 2011, investors are having to navigate an increasingly complex dynamic where both borrowing costs and home values are relatively high. There's one last potential silver lining. A pullback could help settle at more affordable prices. Exactly. And those are the affordable prices that you want to take advantage of. In fact, it's why I'm getting ready to launch a Series A, a new company that is going to be focused on real estate and taking advantage of this dip. You could sign up to learn more about that by typing in your email, totally for free. It's not a spam list. It's just once we have more information, like a pitch deck for this company, we'll be able to send out more information on it. Just go to metkevin.com/Series A to drop your email in there. So folks, if fear is coming and we actually have statistics already turning dirty for real estate, what could happen next and what should we do to prepare? Well, we'll take a look at that right after you see this. This, folks, is the Redfin Data Center. The black line is 2022. Those are price drops. That is active listings with price drops. Yeah, you've got a skyrocketing of price drops, and it keeps going higher nationally. Everywhere is seeing it. And yeah, all real estate is local, but boy, macro trends are national or global. Take a look at this. Median sale prices already 3% off the top. And don't be so excited that you've got a level there for 4 weeks. Once fear comes in, which now Bloomberg is saying fear is in, it's just a matter of time for that number to come nicely down even more. Remember, the largest drop in real estate prices we saw was 1.9% on a month-over-month basis and a 40% drop over 3 years. So real estate drops slowly, But the reason it drops slowly is because of fear. And fear takes longer to manifest and takes longer for people to react to, especially when it comes to real estate. This is why I gave a warning earlier this year that, look, if real estate starts to turn slightly, like tick, 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 and then you get a Tucker Carlson saying, uh-oh, real estate prices are now down year over year. You get to like February or April of next year, and what's gonna happen? You're gonna get these news anchors going, real estate prices are now officially down year over year. Oh no. Once that news spreads, then you could really manifest the real fear, and you wanna be ready to buy. And so that's why there are 6 critical things that you should consider right now. Number 1, we're in a technical recession. More fear will come. Next year, when that fear comes, be ready to buy. I'm giving you like an over year heads up. Do whatever you can now to increase your income. Honestly, consider becoming a real estate agent. I know that sounds ironic because, it's like, wait a minute, if prices are going down, why would you become a real estate agent? Because that's when people need an agent, when it's hard. And if you could help people in hard times understand the macroeconomics, they will be loyal to you. They will buy with you and you'll massively profit off of it. You'll get rewarded in the good times and the bad. You don't want to be a new agent when it's easy to sell a home. I've got a course on everything that I did when I was a real estate agent, everything that I did when I was a broker, because I became a broker as well, to get clients and to educate clients and to make them lifelong clients. You could do it too. So consider becoming an agent and teaching people about your local market, helping them navigate the buying and selling process. It's easy to do. You can probably get your license 3 months after you watch this video. It's not that hard. You just use flashcards. But whatever you do, get more money so that you're ready to invest. Then pay down debt. For every $1 of monthly payments you have, you reduce your ability to qualify for a home by $2.34. Every dollar is a multiple of $2.34. That's a lot. It's going to affect your purchase price a lot. Number 3, get educated. Stay away from flipping courses. Focus on long-term wealth building in real estate. Super, super important. Number 4, start building your reputation and your connections. Lenders, escrow, title, agents, go to broker tours, go to open houses. Become an expert in your neighborhood now and don't wait. And seriously, number 5, I want you to ask yourself right now, how many people do you know that own more than 4 homes? And the people that you know that own more than 4 homes, are they rich or are they poor? Yeah. You probably know very little people who own a lot of real estate, but the ones you do are probably pretty damn wealthy. Consider that. Write that down. It's not just buying index funds or buying M1 finance pies, okay? Then, number 6, I want you to right now, write down on a little sticky note or something. Write down, hey, I need to get that prayer potion cup from RuneScape. No, just kidding. What you actually need to do is write down, what do I need to do to buy my first home? You might be thinking to yourself, oh, I'm only 18. I'll buy a home in the future. No, your age is not the limiting factor. You picking up the phone right now and calling a loan officer off of Yelp is the limiting factor. Hey, my name's Kevin. I'm wondering, what do I need to get pre-approved for my first home? Would you mind sending me your needs list? Write that word down and underline it, needs list. Sure, what's your email? I'd love to send you my needs list because I actually, as a lender, have fewer clients right now because the market's slowing down, and I'd love to walk you through and educate you through the process of buying real estate as a lender. Boom, how easy. You pick up the phone, you get a lender. Now, if you really want to understand how to value real estate and make sure you're getting deals under market value to make sure you're safe, learn how to fish. Learn how to invest in real estate. Check out the programs down below. Use the coupon code for August 26, and we'll see you in the live streams. Did you really think I'd leave you without circling back to what we talked about, which was, wait a minute, how'd that 12x happen in real estate? Yeah, so I actually have a full video on this, and I'm going to link it down below. It's a totally free video that you can watch, but it shows you a little bit more insight into real estate. And it walks you through how I was able to buy a home for $305,000. That home, by the way, I have now sold for $780,000. So I realized my long-term profits on it. Now, usually I don't like selling real estate. I don't advocate anybody sell their real estate because you give up the fact that you could literally never pay capital gains taxes in real estate. You 1031 forever, and then something happens in the future and you basically get a stepped up tax basis and you never have to pay taxes in real estate. It's really, really incredible. So real estate is a phenomenal way to build massive wealth and never pay taxes. You can't say that in the stock market unless you take advantage of having your own ETF and avoid taxes while exchanging stocks. But, who knows? So those things are pretty expensive. But anyway, watch that video. It's going to be linked in the description down below, and you're going to see that property. The only update from that video is the fact that that property is now sold, and I realized the profits. And like I said, that money placed in the stock market would have done very well. I would have 3 to 4x'd it, would have not held a candle to what I was able to do with that first property and what it led to with other properties. That experience and the money. Whew! Go watch that. It's huge.